Nobody has seen this level of volatility in markets pretty much ever, not even during the GFC. The ferocity of it is astounding in terms of how you look at it. It's also the fact that it's not just the down days that we're talking about, it's the up days as well. The up days are just as strong and just as wild as the down. And that explains to me one thing: markets, just like the rest of the world, are finding it very, very hard to understand and to price what the future is going to look like and what exactly is happening in the next 6 to 12 months. And that's the other thing about this. It is next to 12 to 6 months. It explains the volatility that we're going through. So yes, the Dow down 6%. We did the same thing yesterday. The day before, obviously, we had actually the largest up day the ASX, and I'm talking about the ASX 200 that's been around since 2000, has ever seen. So it's a very, very, very interesting / tough time. I think it's the only way to say it to you, Peter.
It certainly is. The ASX opens in a couple of hours from now. I don't expect it to be much better, but the government is talking to the big banks about more stimulus for small business. Any idea what form this may come in?
So in terms of how it looks and how it's going to be, it looks like being some form of government-backed mortgages. It also looks like the possibility of doing similar things to what we are seeing in the US, which could be actually almost basically zero loans around business lending specifically for keeping the doors open. So particularly towards wages, particularly towards just basically keeping cash flow in as much as they can. So that was the first start of it. The one to watch today is also, or the RBA is out today. This is an emergency meeting. It is out of cycle. We know that they're going to start quantitative easing. We expect them to cut rates again by 0.25% to their terminal rate of 0.025. Do they go harder to zero? Don't know. I don't believe so. But that's the next part of this package. Is the RBA has a role to play in this. They're the ones that are likely to be offering these loans that the government's discussing with the banks. It may be that the RBA basically controls them and puts it straight through on macroprudential rules that basically state very, very clearly how this money will be spent.
Evan, strong banks are really the spine, the backbone of a good economy. But, with quantitative easing coming on and these very, very low interest rates, are banks in trouble? Can banks find themselves in any trouble here?
Yes, they can. And look, the watch on this isn't necessarily that side. It's probably distress in mortgages. So part of what we've been talking about for a couple of weeks now is that the biggest concern around this whole dilemma is if we start to see fairly low unemployment. So unemployment pushes up that stress, it pushes up mortgage repayment stress, etc. That's part of it. But getting back to the RBA, and this is why it's such a big, wide scope, the RBA's role in this is to actually make funding for lending cheaper, which makes it therefore at least sustainable for the banks to continue to operate in a fairly constrained manner, but at least at a manner that they can actually handle. And I think that's probably the way to look at it. So it would be more around if we started to see the population start to see larger levels of unemployment, you started to see mortgage stress, that's when the banks really start to find themselves under pressure.
The banks find themselves under pressure at times like this as well, when people start to make large cash withdrawals. They'd rather store it under the mattress than keep it in the banks. Any evidence of that so far? I don't think there is there? Either here or overseas?
No, there's not, Laura.
Thank goodness.
And in fact, yeah, exactly right. I mean, a rush into physical cash is also unlikely to be a useful thing for you and I anyway. I mean, the thing that's interesting about it is that actually the likelihood of actually having to do most of your transacting online is getting bigger and bigger. So you're going to need the ability to therefore have your cash online, therefore not in the bank rather than sitting under the mattress, because that, I mean, the thing we're heading towards and what we are seeing overseas is that staples are heading online and staple delivery is coming from the line. So your money pulling out of the bank is not likely to be a good idea.
You might remember that during the GFC, there were long queues of people in countries like Greece that was ground zero for much of that. People trying to take the banks actually stopped people from taking money out of the ATMs. That's how desperate it got. But
the Euro crisis of 2011, Peter, was that time, and that was amazing watching trucks actually being pulled into places like Athens and also in Cyprus just to try and keep the banks with physical cash.
Look, we're not yet there yet. No. There's a lot of positive things to look at in terms of getting through this, and governments at least and banks are on the front foot with all of this. So, Evan, always appreciate your time and your analysis this morning. We'll speak to you soon.